Good morning, traders. Welcome to an Ichimoku Cloud Chart Market Review. It's Richard Miller here, and I'm doing today's Nasdaq100 Index Ichimoku Cloud Chart Market Review. We can see we've had a tremendous rally since the March lows here. Brief consolidation, double bottom base breakout there, and then the rally continued. We're now a little bit extended from the cloud. You can see the price action, the distance between the top end of the cloud and the cloud support levels is quite extended. So the market can pull back any time over the next week or two. Support levels to watch out for is the standard line or the baseline. So this is the baseline here. That should start following a sideways moving, should create a sideways moving line here, and the key level of support, as well as the turning line or the conversion line, which is the blue line here, should also show up as an area of support. So what we're looking for is a bit of a consolidation, sideways moving period, just for the Nasdaq to consolidate the recent gains. Front end of the cloud is the key support zone. So key levels for Q1 is 13,131 and 12,744. These are significant cloud chart support levels, with consolidation risk back down to the top end of the front end of the cloud. So there's downside risk to 13,426 in the market over the next week or two. If we look at the weekly, we can see clearly how extended the market is. We had a fantastic buy signal back down here in April and March, and then a fantastic rebound of the market. Became extended from the top end of the cloud, reversed, consolidated the move, and now we're back to a similar situation where we're very extended from the top end of the cloud. You can see this gap here is quite significant from an Ichimoku cloud chart perspective. And just look at the slope of the line as well, very, very extended. So there's significant downside risk in the market, or consolidation risk in the market, because we're in quite a large expectations bubble at the moment. If we go to the 4-hour chart, which is a bit more in sync with the short-term trading, we can see how the front end of the cloud here became key support levels. So watch out for the 13,269 level as a front end cloud chart support level, as well as 1304. So 13,000 is a line in the sand on the 4-hour chart. The market needs to remain above that level, the Nasdaq, for it to stay in a uptrend. Price action above the cloud is bullish, and so we prefer price action to be we long the market with shorter term profit taking. So the market is a bit extended from the top end of the cloud, is moving into a profit taking zone here. Let's see if we can draw a line with these highs here. You can see this, it's within the profit taking zone. Consolidation risk back down to 13,333, as well as this front end cloud 13,472. So watch these two levels on a 4-hour chart on the Ichimoku cloud. Turning to the hourly, we can see a bit choppy trade. There was a bit of resistance here at the front end of the cloud that broke past that resistance. So the market managed to get past this hourly resistance. We're now back, rebounded from the standard line here as well. Front end of the cloud is support 13,675 as well as 13,586. So any kind of snapback will be pinched, or can be pinched, between 13,649 and 13,582. The front end of the cloud. Just watch these levels on an hourly basis, but it's still grinding higher. Bit of a concern is that we've got tremendous MACD divergence between the price and the MACD indicator here. You can see, so there is a bit of a reversal risk, or consolidation risk is quite high on the hourly. If we just check that on the 4-hour, you can see also quite a lot of divergence between the price and the MACD. And then back to the daily, similar situation. MACD is flatlining really, and the Nasdaq keeps going higher. So the trend is still bullish on all time frames, because price action is above the cloud, but we do expect some form of consolidation similar to something like this, a quick brief consolidation in February to make another low in March, and then we can move higher from there. So that's just from a seasonality perspective. So there's a lot of expectations in this market, and there's a little bit extended. And if we look at the weekly, we can see that extension in the weekly. And if you want to see another shocking picture, look at the monthly. That'll tell you how extended this market is. uh, on an Ichimoku cloud chart basis. So beware the risk. There's downside risk, consolidation risk in this market back down to key top end cloud chart support levels. Until next time, happy cloud chart trading.